All right, we got about 6.5 minutes till the bell. Joining me, Joe Mazzola and Kevin Gordon. Joe's the head of trading derivative strategist, and Kevin's a senior investment strategist. Charles Schwab. Afternoon, guys. So we got a lot of stocks on our mind here. Joe, get us started. We've got VIX just kind of creeping up. It kind of seems like one easy way to describe the last week is maybe vol was just too low.
It was too low, and it was low, kind of, especially given the fact that we're heading into the non-farm payroll. Which could be a decent market mover. It's when I look at what we're seeing in maybe some of the indexes, whether it's the S&P, Nasdaq, even the Russell to a certain extent, we have seen some protection. We have seen some downside buying, some of the skew, Oliver, that you and I talked about in the past, where you're looking at the puts versus the calls, 10% out of the money. That's pushed back to levels that we really haven't seen since October, November period. So, there are some hedgers that are coming into the market. I think that there's maybe expectations that this could be a potential, market moving event. Well, time will tell. We'll see, because we thought the same thing with PCE, and then, basically you opened up, you traded down, tested the 50-day moving average, and then you rallied up into the close. So I think it's a market that's looking for some traction. It's looking for a catalyst, and it's going to, continue to maybe trade sideways while we're waiting for that.
All right. So far this week, generally been marked by soft data. Jolts declining pretty notably, and then a reminder that some of those rolling recessions, as your team has noted, Kevin, are still in some of those areas like manufacturing. So is that the way we describe it, or do those rolling recessions still have some hope of rolling upwards?
Yeah, I mean, it depends on which data point you look at. Even within a sector like manufacturing, I thought what was interesting yesterday is that, the ISM manufacturing PMI deteriorated further, fell into contraction. But if you're focusing on the PMI that comes out from S&P Global for the US, it actually strengthened from even its preliminary read for May. So if you were leaning bearish, you could focus on the ISM. If you were leaning bullish, you could focus on S&P. But I think, broadly, you're still in this uptrend where even for something like ISM, it's been a choppy path to recovery, but you're nowhere near the lows, and you're definitely not near, any sort of low point that would be consistent with a sort of traditional NBER defined recession. So I think that's notable. But the other aspect of it, or the other aspects to consider, are deeper cyclical parts of the economy that are much more rate sensitive, like housing and to some extent consumer goods. And for housing, that's been a choppy recovery too. You have seen a trough in sales, but it hasn't been, this steady upward climb. And then even for something like goods, inflation adjusted, personal spending in the goods sector has been flat for about 2 years. So it's not that it's been, Armageddon and it's taken this huge leg lower, but it's just sort of been dormant and hasn't moved much, all as, services spending has started to ease a little bit. So, yes, some are turning into, some rolling recessions are turning into recoveries, but that's not necessarily synonymous with, boom time expansion.
Today, we've got some underperformance from some of the cyclical groups. I know that you guys have been outperform in the sector model for some of those cyclical themes like energy, banks, materials. Do these data cast any doubt on the ability for those economically dependent sectors to heat back up?
Not necessarily. I mean, if we saw more, I think, of a signal that a lot of these recoveries are, turning into head fakes, then yeah, we'd probably revisit that. But I think for the most part, the economy kind of normalizing and getting into, I guess call it broadly soft landing mode, that tends to help for, tends to be an aid, we would think, for kind of the catch up that still has to be done for a good chunk of the market. You're no longer as concentrated as you once were, like a year ago, for gains, whether it's within the Mag 7 or just the large caps. But you do need to see more of a pickup in some of those cyclical areas in order for those parts of the market to also act well. And of course, over the past few weeks, couple of months, depending on which time frame you're looking at in particular, there has been a little bit more of a defensive bid, whether you're looking specifically at utilities or you're going in some of the large cap growth areas like communication services and tech. But we also know that comm services and tech have been looked at as more defensive in this post-pandemic era.
All right. Like that analysis is, we have seen some interesting kind of little mini rotations sector-wise and some of the more defensive stuff in the last couple of weeks. Joe, thinking about Friday, back to options for a second. What are we looking at in terms of just expectations move-wise? Because we started off the top of the show today just noting that generally, stocks on the index level haven't really moved a lot.
And they haven't. And we look at the range over the last month, and the S&P 500 is about 3%, and a lot of that was the upside, right? So we hit an all-time high, and then we've just been kind of chopping around. So, the expectations for the weekly move, so basically Monday through Friday for the non-farm payrolls and the S&P 500, is about 1.2%. Not big, but we've been kind of chopping around unchanged. So if it's going to be, it looks like if there's going to be a move, maybe that's going to be in the latter half of the week. Remember, we still have ADP tomorrow. We still have jobless claims, and we still have ISM services and services PMIs all before the non-farm payroll. So, potential to move the market a little bit either way.
Okay. All right, good stuff, guys. Good thoughts. Nice way to close out the show. Appreciate it very much. Joe Mazzola, Kevin Gordon.